The rapid transition of artificial general intelligence from purely software to massive physical infrastructure has triggered a historic collision. We are now witnessing an unprecedented intersection between the world's most powerful technology companies and ultimate state power. At the absolute center of this paradigm shift is OpenAI's private and highly controversial proposal to the federal government. They have proposed granting the United States government a direct 5% equity stake in their own company. With OpenAI's valuation recently peaking at a staggering $852 billion, the implications are profound. This proposal represents a massive $42 billion value transfer directly to the public sector. Championed by CEO Sam Altman, this bold vision aims to establish an entirely new economic framework for the nation. It envisions a sovereign wealth fund financed directly by the explosive growth of frontier artificial intelligence technologies. To truly grasp the scale of this proposal, consider the financial weight of a 5% equity stake. It would instantly transform the United States government into one of the most significant financial stakeholders in AI's future. But this strategic move is not simply an act of unprecedented corporate philanthropy or public benefit. It is a highly calculated geopolitical strategy designed to secure the massive physical assets required for future scaling. The training of next-generation artificial intelligence models has fundamentally changed in its core requirements over the last year. It is no longer limited by elegant code, algorithmic efficiency, or even the availability of raw data. Instead, the absolute hard limit on AI progress today is the raw capacity of the national electrical grid. To build the required gigawatt-scale data centers, tech giants need far more than just venture capital funding. They require dedicated nuclear power sources, expedited zoning permits, and the full administrative backing of the state. By offering a direct multi-billion-dollar equity stake, OpenAI is attempting a masterstroke of political alignment. The company aims to permanently align the federal government's financial interests with its own aggressive technological expansion goals. If the government profits from OpenAI's success, it is financially incentivized to clear regulatory and infrastructural roadblocks. This concept of an AI-driven sovereign wealth fund has already sharply divided lawmakers across Washington, D.C. It highlights a growing philosophical contrast between voluntary corporate alliances and forced government nationalization. Under Sam Altman's proposed voluntary model, leading companies would donate passive, non-voting equity to a central public fund. This would include not just OpenAI, but potentially competitors like Google, Meta, and Anthropic in a unified effort. The idea is to socialize the incredible financial gains of artificial intelligence, while keeping control firmly in private hands. However, on the other end of the political spectrum, progressive lawmakers see this voluntary approach as insufficient. Senator Bernie Sanders has been at the forefront of drafting much more aggressive, mandatory legislative frameworks. Senator Sanders' proposed American AI Sovereign Wealth Fund Act takes a drastically different approach to public ownership. His legislation would mandate up to a 50% equity surrender for any AI lab heavily utilizing public resources. This includes companies benefiting from government research grants, subsidized power grids, or public infrastructure. The Sanders legislative alternative fundamentally treats advanced computational resources as a modern public utility. It demands not just passive shares, but active voting board seats and direct democratic oversight of AI development. This clash of ideologies forces us to examine the philosophical foundation of Altman's proposed voluntary fund. Altman has explicitly modeled his concept directly after the highly successful Alaska Permanent Fund. The Alaska Permanent Fund was established back in 1976 to manage the state's booming oil wealth. In Alaska, a significant portion of state oil royalties is directed into a constitutionally protected investment fund. This fund then pays out annual cash dividends directly to every eligible resident of the state. OpenAI proposes a remarkably similar digital dividend for the entire American population. But instead of swapping traditional physical oil reserves, they are offering abstract, highly volatile computational equity. Converting highly illiquid private technology shares into stable, reliable public cash payouts remains a major hurdle. There is a massive microeconomic difference between trading barrels of oil and holding private tech stock. Unlike liquid commodities, tech equity values can fluctuate by tens of billions of dollars practically overnight. These valuations are often based entirely on market sentiment, future projections, and highly speculative investment rounds. Relying on such volatile assets to fund a reliable national dividend program introduces immense systemic risk. Furthermore, direct state ownership in private tech monopolies introduces a terrifying paradox for federal agencies. It creates a massive and undeniable conflict of interest for federal antitrust enforcement and regulation. Imagine a scenario where the government's own sovereign wealth fund relies heavily on OpenAI's corporate profits. In such a situation, regulatory agencies like the Federal Trade Commission may face immense, unseen political pressure. They might be strongly discouraged from investigating, regulating, or attempting to break up these very same tech monopolies. This central paradox could easily lead to a state of permanent regulatory capture by the tech industry. Dominant domestic players could be shielded from anti-competitive scrutiny under the guise of protecting the public fund's valuation. If breaking up a monopoly hurts the national dividend, politicians will fight to protect the monopoly. Geopolitically, this proposed state capitalist alignment signals a massive shift in American economic strategy. It suggests a movement toward nationalized technology structures, uncomfortably similar to competing global powers. For decades, the American technological edge was defined by free market competition and fierce independence from the state. But the staggering capital requirements of artificial general intelligence are forcing a historic merger of public and private power. The United States government recognizes that winning the global AI arms race is a matter of national security. And the tech giants recognize that they cannot build the physical infrastructure they need without the government's power of eminent domain. This mutual dependency is the true driving force behind the $42 billion equity proposal. We are moving beyond the era of software startups and entering the era of sovereign compute. Data centers are the new military bases, and advanced AI models are the new strategic deterrents. In this new world, the distinction between a private tech corporation and a state-sponsored enterprise is blurring rapidly. OpenAI's proposal is just the opening bid in a negotiation that will determine the future of the American economy. Will the public truly benefit from this wealth transfer, or is it merely a strategic bribe for regulatory immunity? Can a democracy safely own a massive stake in the very machines that will automate its workforce and shape its information? These are the unprecedented questions that Congress, the President, and the American people must now answer. The debate over the American AI Sovereign Wealth Fund is no longer a theoretical exercise for futurists. It is an active, high-stakes political battle being fought right now in the halls of Washington. As this historic struggle for compute shifts from private boardrooms to the floors of Congress, the stakes could not be higher. The outcome of this negotiation will permanently redefine the relationship between advanced technology and sovereign states. It will establish the rules of engagement for the artificial intelligence era and determine who controls the future. The $42 billion equation is on the table, and the world is watching to see how the United States will calculate the answer. The decisions made today regarding sovereign compute will echo for generations to come. This is not just about technology. It is about the fundamental structure of economic power in the 21st century. And as the lines between corporation and nation-state dissolve, we must ensure the public interest is not lost in the transaction. The era of sovereign AI has officially begun.